Hi guys, welcome to Tabaruk. I'm Fahad and this is Moin, and we're two mates and investors, and we are the best halal and ethical investors in Australia.
So at Tabaruk, we teach others how to grow wealth. We talk about the Australian share market, the ASX. We share our life portfolio, the companies that we invest in. We talk about the in-depth analysis on those companies. We write step-by-step guides, articles, and videos. So Fahad, are we worried about the current market situation?
I wouldn't say I'm worried. However, I want everyone to be very realistic when they're examining the market. What this COVID-19 has done is it's not a financial crisis we're actually in. It's a health crisis, which has averted and delayed a financial crisis by bringing things down back to their real value and forcing people indoors, which is causing contraction in GDP. And all of these factors are there. Plus, then there's a fear element of people losing lives.
That's an interesting one. I think when it first gripped people, COVID, there was a lot of fixation on the rate of infection and number of people getting infected.
True.
What I believe we're seeing now, given numbers are rising in the US and other parts of the world, and some parts of the world it's under control, the fear has shifted from getting infected to the fear of dying.
True.
Right? So, and I think as people realize that standard of care in hospitals has gone up, maybe we're close to getting a vaccine, maybe there's treatments that will save people from death. I think we're in a position where the fear has shifted to we may not die. The chances.
But we may get sick.
Correct.
And also, there was an interesting article I read. It's in Japan. Their mortality rate is quite low.
Quite low.
And people are like, why is that so? Maybe they have a better immune system. I don't know.
Yeah. But in the US as well, I think the death rate is lower than what it was.
But end of the day, when you're looking at this is people want to move on. People want to get on with lives. Businesses are getting smarter. They're getting, they're adapting, they're innovating. And there's one thing you can't discount is we're resilient. We have been on Earth we have been around for a long time.
Humans, yes.
We've got worse things than this that's come up.
Yeah.
I mean, if you look at the last two world wars, we've come smashing out of the gates.
Correct.
So I don't see us being bunkered down for the next 3 to 4 years.
No.
I see innovation coming in play. I see people moving to cloud technology. I see people trying to simplify the process, disruptors when it comes to manufacturing, keeping in mind that there's going to be social distancing, how it's going to impact manufacturing on a large scale.
Yeah.
So technology has to catch up. Human innovation needs to keep up with this.
People are going to find ways of making things work. That's what it comes down to. Like, the world's not going to stop.
No, world's not going to stop. People, the market never stops.
No.
Not for anybody.
Yeah.
So the market's going to keep going. So right now, am I worried? No. Because every depression in history ended at some point. Well, it was painful, bloody painful, but it ended.
Yeah.
And every recession always corrected itself over the long run. One thing I don't understand is why people always say recession's bad, recession's bad.
Yeah.
Recession's not bad. Recession's actually a good thing.
So we're in a recession now, technically.
Smack bang right in the middle of one.
And we're defining recession as
loss of jobs.
Yep.
Quality of life decreasing.
Yeah.
People
from
losing.
a market perspective, I think
you have to be below 20% pullback. We are, and at the same time, we've had some crazy rallies
as well.
But that's based on hope.
Yes.
So where's the rational investors? What should you do as a rational investor? Hold tight. I mean, what was that quote you told me?
A classic mistake investors make is selling a long-term position in a company for short-term fear. Yeah.
COVID is a short-term fear. Loss of money is a short-term fear.
Yeah.
The companies you buy, they better be well prepared. When you're buying a company, if they're going to be leveraged, well, I'm happy to see them go fail themselves because I don't want them in the market.
Well, almost every company we own is one that we believe has enough finances, but also the capability to survive a long time.
Exactly.
So,
pay off their short-term and long-term debt.
And what are we going to do if the market? We have a plan either way, whether the market goes up or down. Market goes down, we double down on some of our positions in the best companies.
On all of them.
We bring our average cost of purchase down because they're trading at a discount, unless something fundamentally changes. Market goes up, keep looking for sectors that are going to perform, that are going to grow. Keep looking for good quality companies, some hidden gems. So when we look at some of the fundamental changes that would tell us, okay, hang on, we need to reassess this company, it would be if the company's management changes.
Mm-hmm.
It would be if the company's competition has changed, that product that they have in the market.
Or if that moat has easier to cross.
Correct. So when we say moat, and you'll hear this term if you look at what, say, Warren Buffett has said, a moat is basically a barrier around the company, which makes it harder for other competition to enter. They're unique in their product, or they're unique in their marketplace.
Niche in their market.
In that niche.
Yeah.
So a moat is a good thing. But it doesn't mean that we are only looking for companies in a moat. Sometimes there's some companies that are competing with maybe one or two other companies. That's still good. You might look at buying or investing in
BHP and Fortescue Metal. They both have as an example. As an example, but they're both good at what they do.
Yeah.
Lean management.
Right.
So what a recession does is get rid of people, burn people with bad financial behaviors, overly leveraged, living above their means. But this is not only on an individual basis, because this is where the foreclosures come from. They can't manage their debts. They've borrowed way more than they can pay back. Yeah. But this is also for companies that operate in a very, I think it's unethical. If you're going to be operating on the ASX, you're going to be taking money from your investors.
Yeah.
There's a certain level of trust that goes with those managing those money. And if you're going to run an overly leveraged company, I'm happy to see you, go insolvent. Because what a recession does is get rid of bad money, speculative money, bring everything back to its real price, real value, and get rid of all these cowboys on the market.
So it's going to do that. It's going to speed that process up. If a company was on shaky fundamentals,
bang,
running unethically, like Fahad said, overly relying on debt, not doing the right thing by people who are trusting in them and investing in them, they're going to go broke.
And I'm happy to see them go broke.
That's actually good if you look at the big picture thing. People who were operating on a shaky foundation, when the foundation's gone, they're going to crumble. Whereas what you're left with then is companies with sound fundamentals, running well, that are good investments.
Exactly.
So in a recession, there's a few other things that come up that are good for us as investors.
Okay. So buying opportunities, that's what we're all in the middle of right now. We could be in this phase for the next 2 to 3 years, to be very honest. I don't know where the market is going. I'm being very upfront, but I do know where the market will be in 10 years, 15 years, which is going to be sky high. And we've always come smashing out of the gate after every recession. Higher highs, higher lows. And the next thing is increase in savings. Because what this does is, recession is once in a lifetime event for adults, young adults, because the previous recession that happened, our parents were the ones that were smack bang in the middle of it. We didn't know what was happening because I had food on the table. I put my uniform on, I went to school, and I came home.
I think on average, I had a look at this, 35 to 40 years is when you'll see a recession like this.
Of this scale. Yes, of this scale.
So really, Fahad's not far off the mark when he says it's a once in a lifetime opportunity. And the way that this is playing out, people think, oh, it's finished, we've missed it. No, you haven't, mate. There's going to be so many more opportunities this phase and more as the market continues to correct. Like right now, we think there's certain sectors that have grown too quickly again.
IT just gone through the roof. Healthcare. I mean,
now,
what on earth is happening, guys?
Correct.
Come on.
And that makes our portfolio look really good. Like, don't get me wrong, I'm happy
but at the same time, it makes me very uncomfortable because these are the same people who are going to jump ship at the slightest bad news.
And that's happened. Like a couple of weeks ago, the market corrected by 5%, I think.
Yeah, which was a good thing.
And people panicked. Like, oh, again. And here's the thing, right? It's almost like a leading indicator. What happened at the same time? Toilet paper started running out on shelves again.
Yes.
Which was funny.
Which was funny, yeah.
Yes.
Actually, yes, Costco. True. Ethical investment is a way of life. You're buying companies that are ethical, they manage a good balanced book, they have a good structure, they have a good contribution to the economy, to the people, to the macro and micro level of the spending spectrum. And what you're actually going to see that these companies do is the people are still in jobs. There's still money being pushed into the market, money going to people's pocket.
So how do you think there's
Mhm.
going to be an increase in people's savings because of the recession?
So I think people are going to put their money towards what's needed.
So they're
What do
going
you
to
need?
they're going to hold on to it more, save it, spend wisely.
Spend wisely. So it's going to be rent, food, and utilities, essentials. They're
Must-haves.
just going to have the
Yep.
must-haves. And if you look at the JobKeeper payment on what is actually being spent on,
Yeah.
it's the essentials.
Yes.
Rent is the one that's being paid first. And it's actually good to see the Australian spirit
Yep.
coming out with a lot of landlords and tenants working. Yes,
Working
you have
together.
a few that, butt heads. But hey, that's
Gonna happen.
that's life, man.
Well, so that's interesting, right? Let's just quickly touch on job seeker.
But
What's going to happen?
Quickly.
Yeah.
This is actually going to delay the next credit crunch.
So
Because it's
job
pushing
keeper
that down
is
the
going to
line.
run out.
JobKeeper will run out.
Government
yes.
will say we can't afford to pay that anymore.
Mm-hmm.
What's that going to do?
If that were to happen,
Yep.
what's that going to do? That's going to get rid of a lot of zombie businesses.
Yep.
Businesses that are being propped up. It's
Yep.
probably better for the economy.
Yep.
And I'm sorry.
Yeah.
It sounds a bit
Doomsday, but
doomsday,
that's the truth.
But
And
let it go.
I'll bring up a little chart. You can see
Snap it clean.
insolvency, number of businesses going bankrupt and insolvent. You can see that it started to rise. Government kicked in with stimulus and job seeker, etc. Dropped down again. But this is artificial and temporary. Once
And
this stops,
stimulus. It's funny if you look at historically, every recession that you've tried to delay, kick it down the road as long as you can through stimulus packages.
somebody else.
The kickback
Yeah.
is always big, and we're also not thinking that this is a debt that's going to be on the Australian. As Australians, all of us are going to be sharing this. Yes, we're getting quick money in our pocket right now.
Yeah.
But someone's going to pay this back. If not you, not me, our kids, their kids.
Yeah. We look forward to sharing more content in our next video. Links to our website and articles are down below.
Subscribe, like, and share. Come join us and grow your wealth in a halal and ethical manner by rewiring your mind.